Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com. This is Friday night, or December 5th video being made on December 7th, and I'm just trying to get it out to you before Monday morning. Let's talk about Friday's action, which I just thought was superb. You just got some really ugly unemployment numbers, but to me, I expected some bad numbers. You're not going to get any good news down here at this time. All the good news comes out at the top. So now the news you're going to get is all the reasons why we are down over 6,000 points in the last 14 months. All those reasons are now going to start coming out in the press. So don't expect any good news. It's going to be all bad news, which makes it very difficult to force yourself into maybe thinking that the market can probably do a little bit better, because the news is going to be so bad. But we've had 3 days in a row of some ugly economic news and forecasts, and yet the market's held up great. Friday, on a Friday afternoon, you get a 250-point rally at on a close. With those kind of unemployment numbers, to me, says a lot. So I'm going to continue to explore the possibilities that the market has a good chance of seeing its low for a while and probably wants to do a little bit better from here. And I don't know if it's going to be a major rally, but I think we have a good chance of having some sort of intermediate term rally, which I think you can make some decent money on the long side. So I have a new idea. It's on the long side, and it's SPF, so we'll take a look at that. I'll show you how we're going to take that idea and turn it into some money, and then we're also going to take a look at some of the market averages, and I'm going to lay out the scenario that I laid out a couple days ago, and I'm sticking to it. But there are some hurdles we still need to get above. It's not clear sailing yet. There's still a little touch and go, but I just think Friday's action was very, very encouraging, at least the way I see things. So without further ado, let's go take a look at SPF. This is a daily bar chart of Standard Pacific Corp. SPF is the symbol. This would be a call on the long side. We'd be looking to buy this stock Monday somewhere between $2 and 3 cents where it closed, and I'd like to see a pullback down around the 180, maybe even as low as 160 area would be a good spot to get in. My target on the upside is $5 a share, which is the old high area. Now it's this pattern here that I think it's going to try and revisit. Now, does it get to the top of the pattern, or does it stop at the bottom of the pattern? So this 5 is not an exact number. It's somewhere up in this area here, I believe the stock will get to. Sell stop, a close below $1.50. That would be a close below this level right here. I wouldn't say it destroys the pattern completely, but it'll upset the triangle that I see forming. And that triangle, what I see here is the beginnings of an ascending triangle. It's been forming for about 9 or 10 days. And I think Friday was the first day we had our actual breakout close above the first resistance area. So any pullback down into the triangle is what I'll be looking for, to pick up some of this stock. If it runs, I'm not going to chase after it. I'll wait for it to pull back either that same day, or I'll wait till the next day to buy it. Okay, so let me recap this. This is SPF. This is a call on the long side. With some patience, I think we can make close to $3 on this trade. All right, let's go take a look at some of the major indexes, and let's continue to explore the possibility of the market going to do better. Each day more and more evidence shows up, and I'm going to share that with you. Okay, this is a daily bar chart of the Dow Jones averages, and why I think there's a strong possibility that the market wants to put in a bullish formation is one of the reasons is this reason. I'm going to turn this into a 9-day chart, which means each bar represents 9 days. I'm going to zoom out. I'm going to take you back to 2003, which caught this support area here, and that was the low after the the 9/11 attack that shook up the economy a little bit, and then we since recovered, made a higher high, but now we're back down here again. This is why this area makes sense if the market is going to do better, this is the area that makes sense for it to hold on to. And you can see from this chart that we've already tested this low once. Okay, and that's why I think there's a strong possibility that the worst might be over for a while, and we may want to try and put in some sort of a bullish formation. Although it's not perfectly in place yet, I think the odds are high, and it just makes sense to me that this is an area where it could happen. Now we're going to go back to a daily, and we're going to continue exploring the possibilities of the market wanting to do better. First of all, Friday was an outside reversal day technically, okay? Terrible news, and the market managed to close up over 250 points. I just thought it was an outstanding reaction to bad news. And it was the third day in a row that the market got hit with bad news that it was able to hold up and recover from. So I just thought it was outstanding. Now, some of the scenarios that we've explored and we think are still a strong possibility is the fact that we may be in the early stages of a reverse head and shoulders, this part being the left shoulder, this, of course, being the head. Now, remember, this old low down here is at 7,400 area, which is the low of 2003. And so we've bounced off it. Now I think we're probably working on putting a right shoulder in. This is one possibility. But we need to stay above this neckline. We don't want to close below this. And what we need to happen next, there are some hurdles that we need to get over. And the first hurdle is to close above that high that was made the Wednesday before Thanksgiving. Now my short-term indicator is back up overbought. I wouldn't say it's terribly overbought because it just got there. There might be a little more wiggle room on the upside. But we need to get above that Wednesday high. So the scenario that I drew out the other day, which I'm going to stick with for a while because it makes sense to me, is the scenario. This is the scenario that I think probably is possible. Okay? We eventually break out of our first resistance area, and we get up to the second resistance area, which is the top of the head and shoulders. Okay, then we need to come back down again because I don't think the right shoulder will be complete at that point, and we need to come back down somewhere in here and bounce around a little bit, and then eventually when we come back up, maybe the next time we'll be able to get through this resistance area, and then the entire reverse head and shoulders will be in place at that point. But we're still speculating at this point. One step at a time. Look, we need to see a breakout above this resistance area. So Monday or Tuesday or Wednesday, probably early part of next week, be very interesting to watch. But I'm so impressed with the fact that the market just shrugs off this bad news. And also, the fact that the market is down 14 months. I've always been taught from some of the best technicians that I've known is that the average bear market lasts about 18 months, and we've already been in this for 14. So, there's a lot of things technically falling into place that make sense that there's a chance that the market probably wants to do a little bit better. All right, let's move on to another index. I can't go through all of them because I'm running out of time. This is a daily bar chart of the QQQQs, which represents the top 100 NASDAQ stocks. And you can see we had a nice technical day. We had a really good outside reversal day, meaning we had a lower low than the day before and a higher high, and the market closes right on the high of the day. Now, the key areas here are we do not want to see a close below that level right there, but what we do want to see is a close above that level. So, like I said, with the bad news, the market acts extremely well in light of all that bad news. But once again, I'll say, all the reasons why the market's down for 14 months is all that news is now going to start coming out. So prepare yourself for nothing but bad news. It's really telling you the reason why we're down. And the market's a leading indicator, so the market's going to tell us what's going to happen for the next 6 months. And we need to listen to the market, not so much the news. Until Monday, this is TK signing off.